Right, folks, thanks for joining. So this call predominantly tonight is really for new people who are looking to get started with us. So you might be watching the recording back, or if you're on the live call and you're brand new, this is predominantly aimed at you. One thing I've really prided myself on since starting this community is full transparency about everything, about expectation, about why I do this, why I promote it, why there's a free community. I'm very transparent about everything. So I'll go through a little bit of that before we get started. And then I'm going to show you a few bits of how to get started. Then I've got a couple of little things down on my notepad here, what we're going to go through. We're going to go through how to start, realistic expectations, account growth, risk management, and then just a little bit on pips. Now, some of you may already know this, which if you do, that's fine. Um, but I'm going to cover it anyway, just so we've covered a few bases and ticked a few boxes tonight. So first of all, the first thing I'm going to do is I am going to share, oops, if it's come up, my Telegram community, right? So this is how new people get started. But first of all, before we go any further, I want to highlight this. I did a little poll earlier on today, asking because today's been amazing. Today has been what, listen, we have good days and we have bad days, but we do have predominantly good days within this community. And today's been great. So I did a poll earlier on. We got 40 people that voted on the poll out of the community. And as you can see there, how did you get on today? Four people didn't trade, three haven't got started yet, and then we've got 13 people made 0 to 50. And you can see the numbers down the right hand side there for yourself. So I'm not going to go through them all individually one by one, but you can see what a great day we've had today. Now, if you are brand new looking at this, when you join this community group, we have a tab up here on the top right, join free. So I'm just going to run you through that so you can see how it looks if you were to get started with this. So you click on there, and then it's going to take you to a support chat. And then in this support chat, you'll get my beautiful face waffling a bit of stuff to you. Welcome to the community, blah, blah, blah. Leave your full name, put your name in, another little bit of a welcome note. And then as you work your way through, there's some more information that comes at you. So it's instructing you as we go, and it tells you what's going on. Now, when you've gone through all of this, you will then go to this link, and it will take you to get started with us. When you go on there, it'll take you to this next page. I don't know if it's going to share this page. No, it's not going to share that page. So let me just try and cross that off and go back. See what happens if we go back. It's not going to let me share that page, but basically that's going to take you to that link will take you to get started with us. Now you'll click on that link and you will go to um, you'll go to get started. It'll ask you to tick two boxes, and then it'll give you an option to proceed or go to a separate website, which is Vantage UK. Now, we're not trading with the FCA and Vantage UK, so you don't do that. You simply press proceed, and that'll take you to the startup process. Once you get going with that, you can then verify yourself, make your deposit, and then once you've made your deposit, you'll come back to this chat, and we do have virtual assistants on the other end of the chat. But it'll tell you've got a step-by-step setup guide, and then you'll come back here and you'll put your account number in here. Once that's been verified by the VAs who are part of our team looking after the back end stuff, they will add you to the relevant trading group. And you can see down the left, we've got the gold standard trading group and we've got a gold scalping group. They're the two groups that we get access to. So that's the first thing in terms of getting started. Now, what I want to talk about next is, and I say this time and time again, I've always been very don't get myself on it. Sure, there's a way I can pin myself here when I'm speaking. Cocaine pin. Right, there we go. So I've always been very transparent about this when people ask me questions about it. So in terms of getting started, realistic expectations. Plenty of people, listen, there's a lot of hype around trading, and the reason for it is because it can be very, very profitable. But being totally honest, for the majority of people, it's just making an extra few quid, or for a large amount of people, it's blowing the money. Because people come into it with the wrong mentality, the wrong mindset, and they treat it almost like they've walked into a casino, walked into a bookies, and they get into this mentality where they want to chase money, they want to revenge trade, the over leveraging, risking more than they should for their account size and so on. So people do blow their accounts and people do lose money. That is an absolute fact, and I'll never sugarcoat that. I'll never pretend any different. But one thing that I'm really big on with our community is talking about discipline. Saying we've got a sound issue. Has anybody else got a sound issue, or is it just Simon? Someone give me a just put a comment in the chat, guys, if you can hear this loud and clear, just so we know that it's Simon that's just getting the. Is everybody else clear? Getting it loud and clear? Loud and clear. Sweet. There must be an issue at your end, Simon. So one thing I've been very open about is that people will lose money because human beings are human beings, and I will tell and talk about mindset, discipline, rules, risking appropriate amounts for your account size. I talk about that all the time. And the reason that I talk about all that stuff is because I've been the person in the past who has come in, who has over leveraged, gambled, revenge traded, blown accounts. I've done it. I've done it all. So the reason I am so big on pushing the right information around all that stuff is because I don't want people to suffer like I did. It cost me money to get to the point where I've got to now through losses, lack of discipline, trading on negative emotions, being an idiot, to be totally honest, and losing money to get to a point now where I'm way more competent. Don't get me wrong, I still go on the emotional roller coaster like everybody else. But what I have managed to master, particularly since the beginning of 2026, is to balance out my emotions even better. And when I say balance out my emotions, I mean rather than being on a massive high when I get a good win and an absolute downer when I get a couple of losses, I've managed to get that balance more in proportion. So I'm not on the Big Dipper. I'm on the roller coaster still. I'm just not on the Big Dipper anymore because I've managed to get these emotions in check and understood that having rules, having discipline, not overlet, doing all the right things, what I'm going to talk a little bit about tonight, by doing that, in following that process, I am going to be more successful than being a lunatic and disregarding all of that stuff. And we've got to a point, or I've got to a point now where I know that I've got it all in check. And I preach that hard to you guys. Now, like I've said, I know that people will still come in. I can give them all that information based on my own experiences, my own losses, getting my pants pulled down by the market that many times and having a good slap around my backside for being an idiot. It's happened to me time and time again, and I don't want it to happen to you guys. But like I said, I can talk about it all day long. Human beings will still be human beings and go and do their own thing. That's the top and bottom of it. But like I said, my focus is to make sure or to give you guys the right information, and then whether you follow that or not is totally at your own discretion. So that's that. Cards on the table on that side of things, and from an expectation standpoint, I'm going to show you a couple of things now that are hopefully going to give you some realistic expectation, because people come in and start in these communities and they may have high expectations, which is great, but I want to give you some realistic expectations. So I want to show you a couple of bits here. So the first thing I want to do is show you a compound chart. Just knocked these up on good old AI. So this is a compound chart based on a £500 account based over a 60-day compound plan, looking at 2% growth on a daily basis and 5% growth on a daily basis. Now, the first thing I want to be clear about here is this is purely hypothetical. All right, there's absolutely no guarantees that this would work to the T. But for example, if you were to grow your account by 2% a day, just based on a £500 starting account, by the time you get to day 60, you would be looking at around about 1,640 quid based on 2% a day account growth. And it gives you a little bit of an example down the right hand side there of how that would look from a number standpoint. By day 12, 634 quid. By day 20, 700, so you can see the compound growth over a 60-day trading period based on starting with a £500 account. Now, first thing I want to say on this is, if you know anywhere else where you can make 2% a day on your money, tell me about it, where we don't have to go through the emotional roller coaster of trading. Because if you can, I'm interested. If I can put some money somewhere and grow 2% a day on it, please tell me, because I'm interested. That is a significant amount of growth, but within our community and the strike rate that we're operating at the moment, it is doable. It's not guaranteed. It is doable. 2% a day is very doable. In fact, we've got a lot of people that are pushing 5 and 10% a day. All right, not every day, not every single trading day, because there's always going to be days and even weeks where we take losses. That's why this is a hypothetical example. But hopefully, by looking at this and wrapping your head around these numbers that I'm showing you, it will help you then be more rigid when it comes to adhering to your rules and adhering to risk management and having some kind of discipline. Because although this is not going to work out exactly to the number that you see on the screen, it's a reasonable guide of the potential that we've got. All right, so 5% a day, which is just insane. Again, if you know anywhere I can get that on my money on a daily basis, please tell me, without having to go through the roller coaster of trading. But 5% a day, by the time you get to day 60, you're looking at over 9 grand if it's to work out exactly like that. Now, we know for sure it's not going to work out exactly 5% a day. It just isn't. But if we can be there or thereabouts, well, that's a significant amount of growth over a 60-day period. So that's on a £500 account. I've got a couple of examples here. I'm just going to show you one more example, actually quite a bigger example. I've got the example on a £1,000 account and a £5,000 account. I'm going to jump straight to the 5k, because this is where I'm going to come on to it about expectation again in a second. But this is significantly well, it's more exciting when you look at the numbers. But obviously, it means you're going to be starting with a bigger capital. So on a £5,000 account, the numbers are just what we've seen previously, but they're just 10x. So rather than being £1,600, we're looking at 16 grand on 2%. Rather than it being 9,300 quid, we're looking at 93 grand. So again, this is just hypothetical. This is not me saying put 5 grand in your money, you're going to make 90 grand in 60 days. I am absolutely not saying that. But this is just a hypothetical example of how you can grow your account. And the reason I'm showing you this is because I'm going to talk about the important stuff now, which is having rules and discipline when it comes to your trading. Because this is what's going to be the difference maker for you. It's not going to be the account size that you start with. It's not going to be anything else other than your discipline and your mindset towards trading and your approach towards it. And when I talk about your approach, I'm talking about rules. Right, so these are my personal rules. I'm not going to sit here and say you must have these rules, do what you want. But these are my personal rules. And since I've implemented these into my trading journey, it has been far simpler. I'm not saying it's easy. Absolutely not saying it's easy. I've had losing days, I've had losing weeks, but over the course of the last 4 months, I have had a fantastic increase, a gradual increase from my starting account size. Right, so rule number 1 for me is never to enter a trade without a stop loss. That is just suicide waiting to happen, because the markets can and will do what they want when they want without giving a flying FUCK about you or your money. All right, the market will do exactly what it wants, regardless of your emotions, what you think it should do, what it might have done, what it should have done, could have done. The market doesn't care. It will do whatever it's going to do, regardless of what trade you've got on. So rule number 1 for me is never entering without a stop loss. And again, I've had my pants pulled down by entering trades without a stop loss, and I've had some good hidings. In fact, the last time I did this, I was stung for 700 quid in the space of about half an hour. And that's painful. So rule number 1 for me is never enter a trade without a stop loss. Now, with the service that we've got, when it comes to taking the instruction from the traders, Sometimes it's quite, the instruction is simply buy now or sell now. So we will go and action that. And what I personally do then is if I enter the trade at let's say market price at the moment is about $4,700. If I enter at 4,700, the first thing I'm going to do is I'm going to put a stop loss in the equivalent of 100 pips. Now, 100 pips in monetary value, dollar value, is $10. So if I'm looking to buy the market, I would have a stop loss of $10 less than where I entered in terms of the price of gold. So if the price is at 4,700, I would enter a stop loss at 4,690. That would give me a 100 pip stop loss. The next thing I would do is I would go straight back to the app where the trader sends the instruction, and I would look for the updated parameters. And typically within a minute or so, or if less actually, the trader's updated everything. He's put in the stop loss, he's put in the targets where we're looking to pull out of the trade and take profit. So then I will go back to the trade and modify and adjust the trade, and I will put in the exact stop loss that the trader has given us to follow. Once I've done that, then I'm just looking to take profit out of the market when price moves in the direction that we're looking for it to go in. So that's rule number one. Never enter without a stop loss unless you want to risk blowing your account, because that can absolutely happen. The second rule for me is not to come trading. If I've got if for whatever reason I'm in a bad mood, I've woke up on the wrong side of bed, I've had some, whatever, like, for argument's sake, my grandma just passed away recently. If something like that, what could potentially rattle me, I am not going to trade. Just because I don't want to trade on a negative mentality or mindset. Because if I'm in that frame of mind, I'm going to be more susceptible to trading out of character, to over leveraging, to risking more than I should. So if my head's not in the right spot, I'm not going to trade at all. I'm just going to have the day off or the morning off or whatever, or however it looks. This is really important, guys, I'm telling you. And the same goes here. If you take a loss, we'll come on to that in a second, but if you take a loss that really hurts you and you get angry about because it should have, could have, would have, and done X, Y, and Z, and you're in a bit of a, you're angry, that's when you run the risk of revenge trading, trying to chase that money back that you've just lost. So the attitude and the mental game with trading is real. And once you can master this one, it's going to make things better for you as well. So never trade when you're in a bad state of mind. The next one is once you've hit a daily target, stop trading. So for me, if I hit, I think today I've done, I might have done about 2 or 3% today, but I have a cut off at 5%. If I profit 5% in a day, I'm out, I'm done, I'm stopped, because that's good enough for me. And I know for a fact that there's nowhere else in the world I'm going and picking up 5% on my money on a daily basis. I don't know anywhere else I can do that. So if I hit 5%, I'm done for the day. On the flip side of that, if I hit a certain percentage loss, which again for me is 5%, I'm 5 and 5, I'm done. Because what I don't want to fall into is the mindset of, fuck, I've lost 5%. I'm just going to put a bigger lot size on my next trade just to try and pull it back, to try and claw it back. Because when you get in that cycle, that's when it just becomes a shitstorm and you put yourself in a world of trouble and serious risk of losing significant amounts of money. All right, I say significant, whatever your account size is, that's the top and bottom of it. You run the risk of blowing accounts if you don't have these rules in place. So that is why I will harp on about this stuff all day, every day, because I know it'll help somebody. Some will listen, some won't, some will blow accounts, some will succeed, some will stick around, some will come and go. That's just the nature of the beast. But I feel more, what's the word I'm looking for? I just feel like I'm doing the right thing by giving this information out. I'm doing everything right in and within your interests. If you choose to follow it and adhere to it, brilliant. If you don't, well, it's the old I told you so. And that just gives me a little bit of peace of mind knowing I've done the right thing to support you guys. Because if I'm going to bring people into a community, I want you to win. I don't want you to be blowing accounts and losing money. I do not want that whatsoever. All right, so these are really important points from a standpoint of getting going as well. The last little bit I wanted to show you about here is I wanted to cover in a bit more detail pips and lot sizes, because again, once you master this, once you fully understand this, then you've got no reason to be doing anything wrong. There should be no reason why once you work out this equation of pips, your lot size, the amount that you're risking per trade, once you suss that out, you should not be blowing accounts. It just shouldn't be happening, because the strike rate we're running at is around about 85% success rate. In fact, today the trades just came, the information just came in from today's trading so far. We've had 6 trades that have been sent, and 6 trades have won. And we've had a potential gain of 840 pips today. That's been today's trading, if you can see that in the small box. I don't know if you can see that, or you can just see this what's on the screen. But anyway, 6 from 6. So that's 100% day. Now, if you're managing your risk properly and you're not over leveraging, you're not gambling, you're not doing anything you shouldn't be doing, you should have been well up today. And as I showed you at the beginning of this call, we've had a successful day within our community. 40 people responded to the post. I think there were 4 that hadn't traded today and 3 that have not even started with us yet. So 30 odd people have had success today within our community. All right, so that's the reality and the opportunity that this presents to you. Now, lot sizes, pips, and your risk. This is so important, guys. So a lot size is basically how much you're going to risk every time the market makes a movement. Now, a 0.50 pips is the equivalent. 50 pips is the equivalent of the price of gold moving $5. So let's just get that picture in your mind now. If the market moves $5, that equates to 50 pips. So 50 pips on a 0.01 lot size would equate to a $5 risk. Now, typically, the traders, I should update this really, because typically we run at somewhere between an 80 and 100 pip stop loss. But if we're risking 0.01 and we're on a 100 pip stop loss, I always put that in first anyway when I take an entry, just to protect my capital. Because I know my account size, I'm risking actually 0.1, which means I'm risking, on a 100 pip stop loss, I'm risking $100 on a trade. But for this example, we're just showing you 0.01. And on a 50 pip stop loss means you could potentially lose $5. So once you understand the lot size equation and the money that you're willing to risk on each particular trade, then that's when it should be a smooth ride for you. And like I said, unless you're over leveraging, you're gambling or whatever. And if you've got a mentality and a mindset of, I'm gonna risk, if I lose 5% in a day, I'm done for the day. Then if you're on a £500 account and you take the first trade and it hits a 50 pip stop loss and you lose $5, well, you're 1% down already. But don't forget, we're operating around about 100 pip stop loss. So that would actually be 100 pips would be a $10 risk on a £500 account. Well, then you're talking 2%. So you can only afford on a $500 account, we'll use dollars as the example. You can only afford a couple of losses if you're operating on the same risk appetite as me. 5% loss, 5% win. If you were to lose a couple of trades, that's you done for the day. All right. So that's based on the lot size and the pips. So once if you struggle to figure this out, guys, let me know, because I'll help you one-to-one suss this out. Because once you crack this, that's the best part of the journey sorted, or the most challenging part of the journey sorted. Once you've mastered this, you're good to go. All you need to know then is how to put the digits into the trading app and take the trades and manage your trades, and it's game on. So that's some really important stuff that I wanted to run past you all tonight. So like I said, guys, if you're brand new and you're looking at this this is the first time looking at this, This is really important information for you to know and to get your head around. If you haven't quite got your head around it, reach out to me and we can have a one-to-one conversation. I'll explain it to you one-to-one in detail so you can crack it. And if we need to do a few bits, screen sharing and all that stuff, we can do all that as well. But that's the formality of the information that I want to share on this call, guys. So I'm just going to wrap up the recording there. If you are looking to get started, you can click the link in the description if you're watching this on YouTube, or go back to the person that sent you this video link and make sure they help you get started. All right. See you all soon. Thanks for watching.